Makes sense. I'll be right here.
Right, good morning, good afternoon, good evening, everybody. How is everyone doing? I hope you're all winning. I hope you're enjoying both the volatility, the SBF trial, and all sorts of wonderful stuff that's going on. I am joined tonight by a very special guest, as you all well know. But before I jump into that, I just want to say thank you for the sponsor for this stream, which is Bluefin, which is the latest decentralized digital asset trading application. I'm trading myself over there a little bit at the moment, trying out my DEX trading, now that all the UK lot have been banned from basically everywhere. There is a link below if you want to support the stream, and I definitely recommend checking them out, particularly at this point in time whilst your volume-based trading rewards, in terms of the epochs that you get of their token, the blue token, are much, much higher than they will be going forward as more users trade on there, etc, etc. So yes, I have the wonderful Trader XO on stream today, and I would like to welcome him and say hello and say he can unmute and start speaking. Hello, sir. How are you?
Hello, Charlie. How's it going?
I'm good, mate.
Good, well.
How are you?
Fab, thank you. Couldn't be better. Great start to Q4. You know, couldn't complain. Decent volatility in the markets. Not just cryptocurrencies, but global markets as well. And it's delicately poised heading into the end of the year. I think we're in for some uncertainty for sure. There's still some fairly large optimism in the crypto space with Bitcoin going to 40, 50K in the next 6 months. I don't see how personally. But yeah, I think, look, either way, I think whatever happens over the next 6 to 9 months, I think we're going to see some absolute fireworks. And if shit really hits the fan, which many will perceive as being bearish, in my opinion, I think that's bullish because you get presented with some fantastic buying opportunities. But whether we see those opportunities remain to be seen.
Yeah, true. I mean, I love that view, and I was actually listening to your stream with, I can never say it, but the Kawasaki?
Adam.
Yeah, Adam. And that whole premise of you can be a high time frame bull, but a medium time frame or low time frame bear, like your trading thesis, you know, do you think it's going to go to 100k at some point? Yeah, maybe, yeah, probably, you know. If I had to bet, gun to my head, like, I too believe that, like, Bitcoin sees all-time highs again at some point, but is it in the next 3 months? Just because we've waited 2 years? I'm not convinced personally, but I don't think it works on a cyclical time basis, particularly as, you know, this would be the kind of only global recessionary environment, should we get that Bitcoin has kind of ever seen at a time where, you know, we've had that, I think, global discovery of the asset and as crypto as a whole, which was the 2020-2021, you know, ridiculous bull run, which I was reminiscing over today, actually.
Yeah. You know,
absolutely.
Look, at the end of the day, it's not really a market for investment, and I've been adamant about that fact that welcome to the liquidity games. I said that in 2022 January, and guess what? It's that's all it's been ever since. You know, we've had one decent rally, you know, from the yearly open to present day, but really, when I look at Bitcoin, again, you expect Bitcoin to have had, and I think it's had its initial rally off the lows, but I still feel there's still potentially downside risk when I look at the Bitcoin charts. And when you look at the bigger global macro context, I don't know whether we see a recession, but I certainly don't subscribe to the idea of a soft landing. And it kind of gets a bit boring, being repetitive like a broken record. That I think we see some better buying opportunities, but unfortunately, this is the reality. I think in the crypto space, especially for the best part of those who joined in 2019, 2020, 21, I think the bull market has spoiled many people in terms of looking for a quick turnaround in the market and thinking, yeah, you know what, it's time for Bitcoin to go on another bull market rally. Whereas in reality, I think you just have to be realistic. You've got to prepare for the worst and hope for the best. And it could be a case where, do you know what, if shit really hits the fan, I'm not talking about from a price perspective, but purely from a market-wide structural perspective. What if over the next 2-3 years, we see Bitcoin ranging between 15 to 40K? How would that leave those who don't necessarily trade, but are looking to invest into Bitcoin under the premise or expectation that, yeah, we think Bitcoin's going to go to 100K in the next 3 years? What do you do if it doesn't? Is my ultimate question. At what point do you then start giving up hope on Bitcoin? Because really, it could take 5 years, it could take 10 years. I'm bullish on Bitcoin as an asset. I think it's a fantastic speculative asset. I think it's got some purpose in the current, whether you want to argue financial system or the financial domain, it's certainly got a lot of interest. And I think it's only a matter of time. When I say matter of time, I'm not talking weeks to months. I'm thinking potentially 1 or 2 years time, maybe 3, that we do see an approval of an ETF. Whether the approval of a spot ETF is bullish or not remains to be seen. I've got my doubts to some extent, but I could be wrong. So I don't really talk about whether an ETF is going to be bullish or bearish. I just have some reservations around that. And what do I mean by being bullish or bearish? I'm not talking about, I think price is bearish here. I'm talking about the longer term outlook on Bitcoin. Could we really see 100K, 200K Bitcoin with a spot ETF? I'm not so sure, I'd rather Bitcoin be in its own necessant nature, in the sense where it's just Bitcoin and you have to buy the physical version of Bitcoin, not a spot backed ETF. But I guess if this is what institutions are pushing for, which will allow them to offer exposure to Bitcoin to their clients without really having to hold inventory, then who knows? Maybe it could be a positive effect. But again, I think a lot remains. And if you look at the regulatory landscape out there, that to me is another cause of concern over the near term. I'm not sure what's going to happen. There's a lot of FUD about Binance. We've obviously seen the current trial between what's her name?
Sam and Caroline Ellis.
Yeah, fucking Daisy and Dolly. So on TOTS TV. But basically, I think, I think a lot of shit could potentially come out of that as well. A lot will be revealed. What does that mean for those parties or external parties that were in some way, shape, or form involved in illicit activity? Do the various regulatory bodies then start going after, say, for example, Barry Silbert and Genesis? Who else are they going to go after then once you unravel the can of worms? And we don't know how far or how deep the rabbit hole goes, and I still feel as though there are some chapters that will probably come out as a result of everything that's happened over the last 12 months. And maybe it's a good thing for the crypto space that eventually we see this stricter form of regulation to move forward as an asset class. And I feel, look, at the end of the day, it's all about protecting consumers. And, we trade cryptocurrencies, Charlie. We trade stable coins. At the end of the day, I don't think, personally, I'd sleep very well if I was fully exposed to stable coins. I'd rather be involved in a market that is to some extent regulated and somewhat FDIC backed to a certain extent. Just gives you that peace of mind. But, I think we're still a long way off anything along those lines. That's just my thoughts, in terms of...
that's fair, man. I mean, one of the things that's sort of been a perpetual drama, I guess, in the space is, like you said, about stablecoins, right? We've had, USDT isn't backed, USDC is, under review and, going to be, basically stopped at some point. And, when they depeg, it's pretty scary if you've got a reasonable sum in crypto and you're like, well, I've got no risk, I'm sat in dollars. I've got $10 here and it's going to be $10, and then it isn't. And it's like,
exactly.
hang on a minute. Anyone who was in UST, the lunar currency, knows that far too well, and that kind of inherent systemic risk, is a bit scary. But equally, I think that's part of the whole risk-reward package. Like, I think, as you say, like things about like ETF and like general adoption, more regulation, etc., it becomes a bit of a safer asset. Like, your expected returns are going to be reasonably lower than they were, especially like during the 2021 cycle, right? Like, that was incredible.
Yeah.
And that makes it a slightly less attractive asset class, but still,
it does.
I think it's the best asset class for most quote unquote normal people to trade. But
I love trading Bitcoin, I really do. But even more so, I love trading altcoins. You've seen, I think in this year alone, I can probably tell you, well, especially over the last 6 months, I can tell you that I've probably had 10 trades on Bitcoin. Trading altcoins, it's been exponentially higher. I absolutely love trading altcoins. I think for me, in terms of price action, the way they move, anything that's half decent in terms of liquidity has been so clean to trade. I thought 2022 was one of my best years as a trader. 2023 has surpassed all my achievements of 2022, albeit I made far greater gains in 2022, because if you look at the relative movement of 2022 in comparison to 23, it's far greater. We were in a trending market, whereas you look at the current market, it has been very much range bound. And I think we've only had the one rally on altcoins, which was in January, February. Some altcoins rallied in March, April. But overall, this is the environment where you purely have to trade level to level on lower time frames, because you run the risk of round tripping any swing trades. Whereas the previous year, it was purely about conviction and swing trading. So you have to adapt to the markets. And I think that's where talking about adaptability is certainly, I think, it's tough for anybody who's new to trading, because you're exposed to different environments all the time. And you really have to think deep about your game. What is the current context? What is the current environment out there? And what type of system are you utilizing? The chances are there's nothing wrong with your system. The probability, or the matter of the fact, is that maybe you're using your system in the wrong market conditions. And I'll give you a classic example. It's funny we're talking about this. If anybody who's a moving averages trader, moving averages work fantastically well in a trending environment. When you have this low time frame, lack of volatility, your moving averages are going to get chopped up. So anybody with an MA strategy in this environment, good luck to you, because it's not going to work. So you really have to recognize, in which environment, what indicators or what system are you using, and is it suitable? And I think that is something that only comes with experience and time. And you really have to adapt. So I think being fluid, being able to read market conditions is a skill set in itself. And it takes time to understand how to perform in different environments, So key takeaway from that point, Charlie, is again, adaptability. I think it's such an important strength to survive in any market condition.
Yeah, 100%. Completely agree. I mean, I'll be honest with you and the chat that this week, the start of this week was pretty bad for me, just in terms of I was basically longing into it. And I was longing into what was effectively, a weak start to the week. It was, I had a fairly sort of bullish outlook on Monday, because I thought that equities would rally off everything going on, and actually equities did, but Bitcoin just lost any form of strength and has just died off since. So, for me, this week of, generally longing altcoins and trying to play high beta rotations, not particularly great. But the last few weeks, people playing mean reversion on BTC have had pretty much a blast. Especially like at extremes, right? It's not been too difficult. Like you say, kind of adapting and changing strategy. You obviously never know what the day is going to be like, but you can certainly start thinking about whether we are in a high volatility or a low volatility environment generally. I mean, it is.
Yeah, I get your point, Charlie, and I think it's really fascinating observing various traders trade different time frames. I look at the chart, and sometimes I think to myself, "Fucking hell, mind my language, but how are people trading this shit out there?" And people are trading on the 5 minute, the 1 minute, the 15 minute, and I think again, one of my biggest inspirations, and I talked about it on the timeline today, funnily enough, was WMD Forex, Will Hunting. See, when I first started trading back in 2016, well, I shouldn't say trading in 2016. If you want to call buying shitcoins and holding on to this trading, then I'm not sure I would classify myself as a trader.
That's where you got involved.
Yeah, that's where I got involved. And I think it wasn't until 2017, April, May time that I really got involved, because the first thing I did back in them days was I joined a paid group. And do you want to take a guess what the paid group fee was for a month?
Oh, don't know.
So
$5. $5.
No. I joined a paid group.
It's gonna be like 0.1 BTC, isn't it?
No, mate. It was. I joined a paid group in April for 3 months, and I paid 1 Bitcoin for it up front. So I'm back in them days. Bitcoin was trading at what, $1,200-$1,300. So give or take $350-$300 a month for a bullshit Telegram group. And I just stayed there for like 2 months out of the 3, and left because the guy running it, well, no comment. And it was at that point that we kind of had a breakaway. There was members in there that got frustrated with a said individual who was running the private Telegram group, and we just formed our own group. And you know what? None of us could generally trade technicals. Everything we did was based on fundamental analysis. And that's kind of my root origins, is like, as a trader, I was never technical. My first insight, and you're going to laugh at this, my very first insight into trading crypto markets was none other than watching Superman.
Was it?
With his course on Udemy. So he released a course on Udemy about cryptocurrencies, how to, I don't know, find the next 100x or some shit. Yeah. And I remember him talking about how XRP, if you got in at 0.002 cents, you can make 100x, how you can be part of a community, how you can get a following and share your thoughts, and you're going to see some great opportunities. Dogecoin was in there. I can't remember what other shit coins were in there, but there was a whole load of them. And to some extent, I've got to be grateful to him, because when I saw him start talking about technical analysis and using fib retracements, and then I started watching other people on YouTube using like just basic trend lines and channels. So that's kind of where my initial initiation process began. And you know what? I could never for the life of me, when I used to be in these like free Telegram groups, and you got to remember back in those days, people used to chart altcoins against Bitcoin pairs, like, all right, price could go to 0.02 BTC. And the next target after that is 0.04 BTC. And I used to think to myself, how do these guys know that this is where price could go and this is where you want to be taking profit? How do they see it? How do they read it?
Draw an arrow like that, and then a week later they'd put it out there, and you'd be like, "What the?"
Literally, it wasn't even that. Yeah, it wasn't even that. They wouldn't be sharing charts. It was literally like, if Bitcoin comes to if this altcoin comes to 0.04572, then this is where you want to buy, and you want to look to sell at target 1, 2, 3, 4, 5, 6, 7, 8. Eventually, one of the targets will hit, so they look like a genius.
Yeah,
and then they'll say, "Look, I call this. It moved 20%." So that was kind of bewildering, and I think that was it really. So basically, I remember buying Voyager or BQX. I remember buying Neo for like $3, which went to $50. I remember watching my account go from like 5 Bitcoin to 30 Bitcoins in the summer of 2017, and then watching it come all the way back down in November 2017 when altcoins got smashed and Bitcoin took off really. And I think it was at that point I got pissed off, because throughout October, November, December 2017, so many accounts were shilling altcoins, but they kept bleeding lower down. I remember, let me see if I can remember what it was called. Bytem was one. Walton Chain was another one, right? I got Walton Chain at 50 cents.
Oh my God, I can't believe I won.
Yeah, Walton Chain, Bytem, Tron was another one I think that I got involved in very early. So these are all great altcoins. And essentially, the only time you're going to really start to pay attention is when you get so fucked off that you realize that everybody's full of shit. The only way you're going to survive this is to figure it out yourself. And that's kind of where the journey started. I had a really good friend in the Telegram group who took an interest in Forex trading. So I don't think you'll remember him. I'm not sure if he's knocking around. He's kind of got in the shadows, but it used to be called a guy called Von Trader
On
or Trader
trades,
Von.
yeah, he came back,
Yeah,
didn't
Von
he?
Trades.
He had
Yeah,
like
great
a
trader.
yeah, he had like an
Yeah,
old grey PFP, if I remember.
that's right. Yeah,
He
yeah.
came back, ran an account to like 7K followers, and then disappeared again.
Yeah, yeah. It's a great lad, and he was actually one of the first guys in that private Telegram, free private, well, not free private, our own personal private Telegram group that was starting to share charts, and he kind of inspired me to learn technical analysis and look into forex trading. So that's kind of where my journey into FX started, was back in 2018, and then lo and behold, I come across Cred, a few other guys who used to be traders, Mark Pavlotsky, Danny Les. Danny Les used to be trading margin trading on BitMEX, and I remember being in Matt's group, and Danny was like, "Right, guys, create an account on BitMEX. Let's take you to the dark side." And the dark side was basically trading futures and perps and shorting Bitcoin, which they did really well. And ever since then, I've been, gripped about technical analysis. And like I said, at that point, it was when I came across SC and Trader Dante and WMD Forex and Paracurve and you name it. Chris Laurie did all the courses, spent about 5-10 grand on various courses, books, you name it, being there. Order flow 2019, market profile in 2019, Sting, Tommy, first really brought that into the group. I remember when I was in PDF. So it's been great. And I think that's the key thing. You've got to network with people in this space. And by hanging around people who are looking to learn and absorb and improve is the only way that you're going to expedite your own learning curve. And I think the resources that we have today, good Lord, I mean, if they were around in 2016, 2017, I would not have taken as much of a drawdown as I did back then, simply because of the number of traders now that are fairly technically proficient on Twitter, on YouTube. Is far greater than anything I'd ever seen in 2017, 2018 era, where everybody was just literally winging it, just winging it and calling bull market. And I think that's kind of like a journey down history lane as to what happened. I can't even remember why we've ventured down this road, but yeah, it's always interesting to know what people's backgrounds are, right?
100%. I mean, it's about like how you identify different, market conditions and stuff. And like part of what you're saying is it's being in different market conditions and listening and trying different techniques. Because we were talking about different techniques, about like EMA crosses, PA, or altcoin beta or something like that. Whereas you just sort of went through your journey and you've tried all these different tools, and now you've built a system around like everything, and you're probably still adding to it, right? Like I know that over the last year or two you've dived into like macro a lot when it became kind of more important, I guess, in 2020, 2021. And then obviously we went through a huge phase of basically like I don't know, I don't think I've watched a JPow meeting for a while, but there was a phase where I'd be logged in listening to him speak every single time he spoke at FOMC and all that kind of stuff, waiting for the minutes to come out and all that crap.
I agree, Charlie. And I think, look, at the end of the day, my approach to trading is it's amazing how simple my trading approach is. And a lot of the feedback I get is like, XO, you make it look simple. But believe me, it's not simple. It's 7 years of hard work and dedication to get to where I am today in a way that, you know what, to make it in this game, you only need one setup, one system, one strategy. It's understanding when to apply that strategy to be successful. And like I said, if you're going to use a strategy based on moving averages on the lower time frames, well, you're going to get chopped up in these conditions because it's certainly not conducive to be successful. So it's understanding when to use your strategy in which environment. And for that reason, look, at the end of the day, there's all this. I feel as though like order flow, market profile is a great skill set. It's a great tool, but I feel it's very glamorized by crypto Twitter nowadays. Like, oh yeah, you want to sound really cool. You talk about delta, CVD, open interest, market profile, order flow, delta unwinds, funding. At the end of the day, all that shit is not going to fucking tell you where you're wrong in the chart. The only thing that's going to tell you where you're wrong in the chart is your invalidation on the levels that you're trading. So still, I feel as though a lot of emphasis is placed upon those indicators and tools and whatever you want to use. But truly, in all honesty, price action for me is where it's king as a discretionary trader. Unless you have some form of semi-systemized automated system, part discretionary, fine, great, but I'm just only talking for myself as well. Is that if I wanted to go balls deep into order flow market profile, I could do. I just don't see how it really adds any massive edge. It adds a level of confluence around price action trading. So when I do execute on Bitcoin, I'm looking at flow and watching the table and listen to AGGR. I've got that on sometimes in slightly more higher volatile environments where there's more volume piling in. Um, I just think that a lot of traders get caught up in the absolute nuances of microstructure, not even market structure, the absolute final levels of detail that they sometimes forget
Yeah,
where
it's
they are in the
interesting
chart.
because, like, I always think that, if I was, oh, there was a time, I don't know, maybe it was like a year ago, maybe it was last Christmas, I think, when my wife was like, I can trade. It's
Yeah.
easy. I hear you talk about it enough. It's fine. And I was like, go on then. I'll fucking give
Yeah.
you a trading balance. Let's go.
Yeah. Yeah.
Let's see what you could do. And eventually she kind of bailed on the idea. But, I was thinking, like, if she was actually serious, how would I go about teaching her from like literal start to finish? And I
Yeah.
think, I'll let you answer in a second, but, for me, it would just be finding one consistent setup and being like, here is a 5 minute or a 15-minute RSI divergence, at resistance. Find
Absolutely.
that, short that every time, long that, or at support, long that every time, invalidation under there, invalidation over there. Right?
And
Do that
yeah.
10,
Yeah.
15 times, tell me the results. Tell me when
Yeah.
it worked, when it didn't, and what things you notice about each of those, when they did work and when they didn't. And just master that one setup and just keep going through it and just get
That's right.
good at that. And that's it.
Yeah. And you've got a point there because you know what, Charlie? I remember working with Sting back in 2018. We were trying to create a way of creating an indicator in TradingView that would look for 5 minute RSI divergences with the MACD. So not only are we looking for an RSI divergence, we're looking for a divergence of MACD with price. And you know what? It's actually decent. It's actually a decent strategy. Try it on FX, try it on crypto for those intraday moves. It's very, very decent, especially when price comes into a level of supply demand on the lower time frames. It works really well. It's something that I should really go back to, but at the end of the day, I think I've just become, I wouldn't say lazy in my own development. I think I've just become very content and very comfortable in the systemization that I have now. That if it ain't broke, don't fix it. And the people talk about alpha, people talk about edge. Let's be honest, you don't have any alpha or edge. Your biggest alpha or edge is your discipline. When you execute, when to execute. That's what your
Yeah, there
true
is a huge
alpha is.
element of that, and it's managing your psychology as well. That's like such a big part, right? You're a trained monkey. I could teach my, 7, nearly 8-year-old daughter to long a setup, and if you see this, and I could probably code it up such that it's so
Yeah,
obvious that that's where you take the position, and this is the invalidation type thing. But then going right, well, I'm up $1,000, I'm up 5,000, I'm up $10,000. There's a clip circulating of a guy up like $88,000 and then just watches it go like
yeah.
massively negative. And he goes like, oh shit. Oh Christ.
Was
Like,
that
oh
it
woof.
was that actually legit, or was it? Do you reckon it was demo balling? Because on another account, he ran up to 250. I'm thinking to myself,
Might be demo
you've got
balling.
you've got that much volatility and price fluctuation in a matter of minutes. Are you for real? Like, can you
Yeah.
stop that? Really?
Yeah,
I
I
don't know.
don't know.
Maybe he is legit. I'm not calling anybody out, but I just think when you're seeing like $100,000 price swings in 2 minutes, like fucking hell, it's
Yeah. It's more the fact that he just goes, oh shit. And as soon as you hear that, you're like, that's where you close, buddy. You were
yeah,
wrong. You
yeah,
should have had a
yeah.
stop. And
It's
you know how it's gonna go. As soon as you see it like
that's
teetering
it.
around his entry, you're like, this is
Yeah.
gonna go badly. You were 80k up. Take it, move
Oh
on.
God.
Like, or either take it there, which is obviously a hindsight thing to do great,
Yeah.
or just stops in profit, just whatever. Even on his setup, I can't remember what his setup was, but it kind of looked like that. And it was here. It was like literally at the line that he'd drawn. And it's like, yeah,
Yeah.
come on, mate. Like, that's, if it starts losing it, which it did, it's probably where you're wrong. And that
Yeah.
thing, like, I don't know, I found it hard to start with, definitely. Just, especially if you catch a breakout trade or something like that that you're aiming for, and then it plays out, and you're like, great, I'm a genius. I've done 10% in like 10 minutes because that is like the premise of a breakout trade, right? It's kind of time bound,
It is.
and then you're up a decent amount, and then you slowly watch it bleed out, and you basically give it all back, and then it fucks off again, and you're like, great.
I mean, let's fire it off to the audience. Are there any questions that you guys want to ask or want to know?
Yeah.
Is there anything you'd like us to talk about? We can have a fairly casual stream. Is there any questions, or are you guys all just fucking sleeping in the chat and you're falling asleep? Listen to me and Charlie. Probably talking.
They're chatting.
There's
a question: is John J. Murphy technical analysis of the financial markets worth a read? My answer to that is don't know. I've never read it.
John Murphy, technical analysis of the financial. I think that's the intro book, technical. Is it the pink and red and white stripy book that I think a lot of beginners start off with? Let's have a look. John Murphy.
What's your favorite soldering iron?
That's it's a decent book actually. I think that's a decent starting point. Personally, I would actually put somebody into learning about supply and demand dynamics of trading and price action, and then probably learn financial markets, because it just gives you an all-rounded knowledge on like trading wedges, ascending wedges, and head and shoulders patterns. Which, in all honesty, once you become a seasoned trader, you don't think, oh yeah, there's a head and shoulder here. Let me just fade the right shoulder. It doesn't work like that. Or there's a breakout of a descending wedge. Let me trade it. No, you really look at it as just a way of confluence. That, all right, what kind of structure is developing and what is the possible risk to the downside or upside if you're short or long. So that's kind of how I look at it. Was there a question about soldering iron?
No. Well, yeah, it was. Okay. It was, what's your favorite soldering iron?
God, I don't know. You know, it's a tough question. I've only ever had one, and I, unfortunately, do you know what I did? It was funny because when I was in college, we had to do a final year project. So for my final year project, I created a freezer alarm. So if for anybody wondering what a freezer alarm is, it's basically a piece. Basically, you just put a wire in when you open your freezer. Just shove this fucking resistor into the freezer, and there's like I had a wire coming out of the freezer door, connected to an alarm slot on top of the freezer, and if the temperature dropped, if the temperature raised above zero, the freezer alarm would actually go off. So that's kind of what I built for my final year project at college. Being naughty, I took the soldering iron home and never returned it back to college and kept it. I thought, okay, I'll keep this. That was that. I took a lot of solder and I'm like, yeah, this is fun. And then I started buying like everyday practical electronics, because I did 2 degrees. My first degree at university was electronic and computer engineering. Wow. A lot of that was like printed circuit board design, logic gates, resistors, capacitors, digital signal processing, how to program pistons, how to program microprocessor keys, all that kind of shit. Hardware, software, ROM, RAM, this and that, how everything works. So obviously for my final year projects at university, to get really good at that, I did a lot of pet projects. It's kind of like how in today's world, if you want to become a programmer, you're not just going to go to university and think that you can rock up to, hello, today is the first lesson in C++. You know, the guy on the internet with the meme, the Indian dude who talking about C++. It doesn't work like that. You've really got to go above and beyond to learn your craft. And the same with trading. You can't just expect to watch a video and learn how to trade. I feel as though like back then, again, to understand how to create electronic circuit boards and basically create my own systems, or wherever is hardware, I had to understand how to do all the design aspects. So that's where that came out of in terms of in terms of that. And then me being me, when I completed my degree in electronic engineering, guess what I did? I didn't even get a job in engineering. I went straight into recruitment, because when you graduate,
recruitment.
Yeah, wow. I had a bit of a thing for, like, you see these like recruitment advertisement jobs in London, earn 60k, 80k, and IT sales. Yeah. So I went into like recruitment and IT sales for 2-3 years, and then you realize actually this is pretty shit. It's bollocks, because obviously back then we were heading into GFC. So obviously, you know, when you see GFC and all these jobs falling off a cliff. And mind you, prior to that, actually, I did a software development course anyway, and I kind of didn't really pick up development full time. It wasn't until I went back to university to do a second degree, which was in computer science and mathematics, and then I was really lured by the fact that who's got the best trading systems is often investment banks. So I was kind of hell bent whilst at university doing my second degree that I want to get into investment banking, I want to be working on high frequency trading algorithms and whatnot. And that was it, really. That was my fascination with financial markets. And eventually, I knew about global markets. I did an introduction to finance back in 2015. I used to work on the front office trading desk with traders, programming systems, back office, and then eventually slacked that off to start to learn to trade myself, and stumbled upon Bitcoin and cryptocurrencies in 2016, and then finally called it a day in 2020, just before COVID, and never looked back since, really.
So how did you transition from a working job to full-time trading? Because that question fits in very nicely with the timing.
Yeah, two attempts, really. So obviously I caught the bull market in 2017, caught the alt market, early 2018. Guess what? I'm a fucking bull market genius. I'm a trader. Buy 2-3 screens, feel good, look good. Lo and behold, 6 months later, I've eaten an 80% drawdown. And I mean, make no secret of it. I've made no secret about it that I took like a 5, 6, 7 Bitcoin account to over 105 Bitcoin in 6 months and thought, yep, this is it. I know what I'm doing. But no, I didn't know what I was doing. Risk management is everything. And I think at that point, I quit my job in 2018. And when 2019 came, I don't know if you remember it, Charlie, the market was dead, absolutely dead.
Mm-hmm.
When November 2018 happened,
I remember.
When Bitcoin went from 6K to 3K, that's when I really started trading a margin, and I really fucked up. And at that point, that was the turning page, because me staying used to chat along with other guys, and at that point, I realized I've got to take this seriously. I've got to create a trading manual. And again, one of the key things I always say to anybody who's learning to trade out there or thinks that they're good at trading: if you think you're good at trading, spend 2 minutes and just explain your own trading strategy to yourself. Write it down. And if you can't, if you don't know how to do it, or how to structure it, then do you even know yourself as a trader? I'm not so sure. And I think it took me 3 months to create my own trading manual and my own trading journal. Like, this is how I want to trade. These are 4 strategies that I want to trade. And ever since then, like I said, that was the turning point. When you appreciate risk management, when you appreciate how to read price, if you're a discretionary trader, you've got to treat it like a business, because if you don't, then good luck. And I think that's with anything in life, Charlie. Like, if you want to go to the gym, become a bodybuilder, or have a great physique, and if you're not logging your macros and your micros and logging your workouts, then how do you ever know how you're progressing? Same with anything really in life. It's you've got to put the hard yards in to become successful. And like I said, it hasn't come easy. 7 years of trading now. I've been doing this, where I honestly feel as though the last 2 years, I just feel in the zone. I've never felt so relaxed when it comes to trading. I look at the market, and within 30 seconds, I can tell you that, all right, here's an altcoin that I want to trade. And literally, sometimes I can step away from the markets and just think, yeah, fuck it, there's nothing here for me. I'll come back in 3 days. 3 days later, like our RNDR was a classic example. I'm looking at it, I think, yeah, I don't really fancy it. 2 days later, 2 days ago, 3 days ago, I'm looking at it, I think this is going to be a really easy short for me to take if I can take it. It's high probability setup. And that's it. You zone in. When it's time to do business, you zone in, you drown out the noise, and you focus on execution. So all I'm looking for, like I said, this all comes back to where I was in 2018, taking multiple trades a day, over leveraging, oversizing, being an emotional wreck. I remember in 2018, I used to take a trade on BitMEX, go to bed, 2 a.m., wake up, look at my chart, go back to sleep, 3 a.m., 4 a.m. Shit, I'm fucking underwater.
Yeah.
I'm underwater. Fuck, if it goes another $1,000 against me, I'm going to get liquidated. You leg it to your desk in panic and you think, shit. And you shit in your pants. I've been there. I've done it all. Emotional. You're an emotional wreck.
Yeah, no, I've done the same.
And then before you know, you take a big fat L. So we've all been there. We've all done it. And it's stupid, really. I remember I used to put like 2 Bitcoins into BitMEX. And when I used to open a position, I used to open like 2/3 of my account size in one position on one trade. I used to eat some huge losses. Again, just stupid rookie mistakes, that not understanding what position sizing is, not understanding risk to reward, not understanding what evolving R is. So these are all like the classic common mistakes that I think people make, and why there's so much emotional attachment to trading cryptocurrencies and, generally futures trading. It's easy to get carried away, because you remember, when you're trading spot, there is no possibility of liquidation. If you're going to cut it, you're going to cut it for a loss, but you can't get liquidated. Whereas futures and derivatives, it's a very dangerous game if you don't know what you're doing.
Yeah, there is. And, the massive downside of it being a 24/7 market is that it's 24/7. People think that that's a wonderful gift, and actually, it can be quite torturous if you can't, like you do, walk away from it.
Yeah, I've learned three things. I think one of the biggest evolutions in my own trading is understanding when to trade a range and when to trade a trend. And it's very simple. When you're trading a range, just assume that you're not going to get a breakout of the range until it actually happens. And this is where a lot of traders fuck up. And this is where, if you're very good at understanding range extremities and you combine that with order flow, guess what? You can actually get into a very good systemic way of
100%.
taking shorts and longs. And honestly, it's not rocket science. I'll be honest with you guys. 95% of my trades, I don't even look at open interest. I don't look at order flow. I don't look at market profile. At the end of the day, I know where I want to execute. I know why I want to execute. All something like order flow does is just give me conviction, understand who's the aggressor and who the market participants are, who's the passive and who's the aggressive buyers and sellers. And that's it. Once you figure that out, and once you figure that, all right, there could be a swing fail or a deviation of a range high, who was that doing all the buying? What was open interest telling you? What was CFD telling you? And it just kind of helps you in your decision-making process. And same with the trending market. You don't want to fade a trending market until it really tops out and gives like a distribution pattern. And only then you want to hit the tail side of distribution to look to trade the market back down, and inverse on the upside when you see an accumulation range forming. You don't really want to be shorting the market down there. You want to be thinking about longing any swing fills, any deviations, any over unders, whatever you want to call it, really. So it's a very simple approach for me. Just trade the extremities. That's where my high probability trades are. And if you understand anything about markets, price ranges 80% of the time, trends 20% of the time. And that's probably why ranges are my bread and butter plays, especially off like swing fills and deviations. Very simple system.
Yeah, 100%. We've had a couple of questions about the R&DR trade. Do you want to the Full Beans podcast? Brilliant.
Yeah, I'm just in the office.
I'll flick over to you.
Yeah, go for it, mate. I'll
to me, to you, the Chuckle Brothers.
To me, to you.
Rest in peace.
One on pass away.
Mm.
Oh, really?
Yeah. We're getting old now. Like my childhood heroes, like
Yeah. All right. Okay. So we've got R&DR.
Can people see that? Just to double check that I've not been a total boomer. I can see it on my OBS or my Streamlabs. Just wait for confirmation in the chat that they can see your screen. I have a tendency to boomer these things.
No, it's absolutely fine.
Yeah, they can. Perfect.
Yeah, very simple, really. R&DR. So, I mean, there's several ways you can skin a cat. Not that I recommend you it, but it's it's however you want to look at it, really. So, first things first. If you can look at what time frame I am for the chat, what time frame is this? It's a monthly time frame. Okay, cool. When you look at market structure, you've had a rally off the yearly open. You've had a pullback. I'm looking for that trend continuation lower down. You've had 3 monthly lower lows and a correction. And really understanding where we are in the bigger context of the market and macro and altcoins, you know that altcoins are bleeding slowly. So essentially, I'm looking for this type of trend continuation pattern where if I can just get a pen, trend down, consolidation, leg down again, okay? So simply put, looking at the monthly chart, let me just clean all the lines. High time frame levels. I always talk about high time frame levels are where you're going to get your best reactions from, okay? Now, when you zoom into the chart, I don't know why this squiggly keeps coming back. When you zoom into the chart here, what do you see? Where's the first point of interest? And again, I keep talking about swing fills, stop runs, liquidity areas on a monthly chart. This is August high, and there's your August low. Is that or is that not where price has been trading for August, September, and October? This is just a range that I'm looking to trade in what I believe is likely to be a corrective move up before we see continuation lower down at some point. Okay, so that's why I wasn't looking for the long at this instance. I'm waiting for price to come and trade into this level. 180s. Okay, we've got the monthly level defined. Now let's go to the weekly. When you look at the weekly, we can get slightly tighter here. Okay, into the July swing high. That's that level done. That's that 182s, there's my swing lows at 125s, okay? Now drop into the daily. When you look at this on the daily perspective, and let's just take it back to somewhere like this. I think this is where I recognize it. When you look at this SR position, look at this consolidation, right? Clean pivotal SR, resistance. Price consolidates, goes to new lows in August, okay? Is that clear so far? Consolidation,
Bristol.
breakdown, retest of this level here or this supply zone, and that's where price sells off. I'm looking to sell this. And when I saw this, and this was what? On Sunday. So Monday, Tuesday, I started tweeting about this. When I saw this on Monday, I'm thinking, yeah, you know what? Generally, when you see a move out of the range high, you want to see a strong continuation. Look at the origin of this move. Rally, corrective move, continuation up. What you generally see, if this is bullish, you're going to get people longing to break out of the trade because it's, oh, look, SR flip. You generally get this. It falls back in. Then you start getting people shorting. Then you get the squeeze up. Not always, but this is one of the 3 trigger points that I trade. You will often get not just a retest of the range high, which people will take, and they think, oh, yeah, it's going to give me a perfect underside retest and I'll short it. No, it sometimes goes above the level, then gets back inside. That should trigger to essentially go short. So now I've talked about, okay, there's a context, right? That's the context of the trade that I want to take. I want to see price get back inside. And looking at the market condition across the board, Bitcoin's not selling off. Ethereum's been holding up fairly decently well. I don't think we're quite ready to break down just yet. So what does that mean? On the 4-hour chart, you look at this price here. Support, resistance turn support has to hold, but I don't think it will because we're not really getting a reaction off this level. When you see that pullback, you want to see a strong continuation higher. So now, at this point, there's 2 ways that I could have traded this. This is a consolidation zone. If price breaks down, which if I run it forward, it did. Okay, so price starts breaking down. You can generally get into this trade. I missed this, okay? And again, I started talking about this on Monday. So I talked about the fact that I'm looking to short the bounds on RNDR. That comes in the shape of the form of, if this was a previous consolidation, which is turn resistance, any spikes back up into there, back below that 181, 182 level, that's a trade for me. I'm looking for price to get back down to these lows about 150, 160. Doesn't look like a great deal at this moment in time, but what it is a high time frame level. What it tells me is that there's a good chance that we could see this as an inflection point. Whether it plays out remains to be seen. So I've got the high time frame premise in my mind. Now let's run it forward. On the 1-hour chart. This is now where I start zoning in into the 1-hour chart. Look left. What do we have on the left-hand side? We've got these highs. Okay. It's acting as a pivotal level. Price, resistance, gets above it, holds the level, rallies again. This zone is where I want to do my business now. And this is based on the 1-hour chart. Range high, possible range lows where I'm looking to take profit. I told you on the high time frame context that all I'm looking for, let me just get a different color squiggle here, is some form of move back up into this level here, right? I don't know where. It could squeeze higher, then get back inside. If that is the case, guess what? I can be aggressive, execution, stop at the highs. If it's going to go, I'll cut the trade. At this point, I do not know if the squeeze is going to come. I don't know when it's going to come, or even if it's going to come. I'm not here to predict. I'm here to play the probabilities. The probabilities give me any push above this level. This whole area now comes into contention. This has to hold, or, you know, we could go higher. It doesn't matter. All I know is that get back below this level, and that increases the probability that price comes back into the mid-range, after the mid-range, back to the range lows. Because we've had 2 attempts to get back above this level, and it's failed. Now, this is where your execution can come into place. Price, okay, pushing up. And I talked about let price push up. I even mapped it out. Somehow I just got lucky on the map out that it followed the path up. Okay, pushing up. This is the key part. if I can just run this back or just ignore this, what you really want to focus on here, I talked about that we want to see price get back below this zone. This is a key pivotal level that will give me confluence that the trade could go in my favor. But prior to breaking down, if you just look at the concept of running the stops or squeezing out late shorts or trapping anybody who's looking at this as a breakout trade, dangerous game to play. But if you look at these highs here, that, as soon as I saw that and price sell off, there is my invalidation at this point here at 185s. Okay, I don't want to see price get above this level. Just ignore this. Just assume that price has come down here. Once I see this, I'm in the trade, executing. This zone here is where I have to babysit the trade. Okay, I'm giving the trade room to breathe. There's my execution. I'm not just going to put a stop here. My trade can go offside. I can be in slight drawdown. But the minute it starts pushing above here, I'll cut it. Why? Because I don't know at that point if it's going to go higher. But what I can tell you is, if this does squeeze me out and then get back inside a third time, surely that's 3 failed attempts of the range high. Now I'm going to step back into that same trade, looking for price to move lower down. That's the thought process right there. So I've executed here. I'm in 2/3 of the trade now. I've left a room to add a third. If for whatever reason, price does give me a squeeze back up and gets back inside, I'm going to add the final third. It just gives me that flexibility to add and be fluid in my trading. And again, now when you look at this from a risk to reward perspective, when I initially mapped this out prior to this move up today, I had something like short round about 185s, short out 180s or something like this, 179, stop at 185s, targeting these lows here. It was around about 4 to 4.5 hour trade. Today, I've executed here around this level. There's my stop. This in itself, just to the mid-range, is a 2.5 hour trade. To the range lows, if it happens, happy days. I will take half off, and I will look to take the remainder down at 160s. So that's kind of the whole premise. Now, if you just run it forward to see where we are currently. All right, that's where we are. So still, I'm just being cautious to see what happens. If we get one more squeeze up and drop, that to me is a shift in market structure. We've got this high, higher high, higher low, higher low, higher low, higher low. Okay, now we've got this lower high. Possible breaking market structure here. Looking for the lower high into a lower low. There's your shift in context. Now you've taken profit at the mid. You're probably going to bounce around, break below the mid. There's your 4 hour trade done. Time frame, maybe 2-3 days if it's going to play out. Invalidation, still above here. Take a 1 hour loss. That's it, literally. And if you want to add confluence to this, you can bring in your monthly opens, you can bring in your weekly opens, you can bring your Monday's range in. It all adds confluence. And I think Monday's range was around about, there we go, Monday's high. So again, you've got Monday's high at this level here. With swing fail the Monday's, not swing fail the Monday's high. It's not really a swing fail. It's just an over back under. And you've got Monday's lows around about here. So again, you've even got Monday's range high that you can pivot around. There's, like I said, there's many different ways you can trade this. But for me, everything I did was based off the high time frame and look to execute. And now when you look at this from a high time frame perspective, it doesn't look too great. It still could push up higher. I don't know at this stage. But when I look at this from an SR perspective and everything that I've done, another way that I divided this chart was, I'll show you again. That 185, 181 level was key for me. Again, if you go to the daily chart here, if I let me go to the 3-day chart, this is what I did. Isn't this a swing high, which led to the lows here? It is. So what do? Well, we've got these highs, okay? We've got the lows. What am I doing? I am drawing a high time frame macro range at this moment in time. And if you line up, and this is another reason why I liked that particular level of 180s. If you line up the 0.5, give or take, you've almost got a clean SR level there, okay? There's your mid, there's your low, there's your high, into that mid level there. SR, support, 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 finally broke down, undecided retest. If it's going to break down, it's got to be from this level. Now, with the high time frame context, if it does something like this, then pushes up, I'll cut the trade, get back inside, looking for that move back down to 150s. That in itself is a 4-hour trade. Now, if just imagine this setup evolves into a swing, you do the maths. What you're looking at, you're looking to trade the context of price. That if this was a move up throughout the year, if this is the trend down, and this is all redistribution, it could be something like this before we see the next leg down. You've got shoulder, head, shoulder. This is where your patterns start coming into place, structural patterns that make you think, yeah, I think there's weakness here. So that's just kind of like a high level overview, very bare. I didn't even look at any oscillators, RSI, none of that, just pure price action based upon high time frame levels where we see inflection points in the chart. And again, like I said, in your high time frame inflection points, that's where you're going to get the best reactions and where you can really zone in on your executions on the lower time frames. So I kind of hope that helps. Literally, that's all I do most of the time on altcoins. It's not rocket science. It just comes with knowing the market, knowing your system.
You say it's not rocket science, but in that explanation, you just put so many things together, whether it was, you know, ranges based on time frames, such as Monday's range, the high time frame view of like monthly, down into weekly levels, then using fibs, then talking about market structure, then talking about patterns, then talking about where people are likely to long and short, you know, where you can see structurally if your thesis is right or wrong early on. And like, that's a lot, you know. Finn in the chat said it's, you know, listening to Exo's reasoning for execution is like watching a Michelangelo painting. It's brilliant. And it is, because you've just done all that seamlessly in the space of a couple of minutes. Like, you know, completely appreciate that it's taken years and years and years of doing it relentlessly to get to that point. But yeah, it's beautiful, you know, just watching. This is one trade, and people will see a stop, a target, and then a P&L card next to it and be like, oh, okay, nailed it. There's a couple of lines on a chart. Well done. And it's the amount of thought you've put into that, the amount of time and effort that you've put into, you know, getting to that trade. I think that's something that people just underestimate generally. Do you know what I mean? Like, that whole thought process is incredible. Like you said, it only takes you, you know, a little bit of time to come up with, and that is the beauty of repetition, right? Whether it's, like you said, at the gym, whether you're cooking, whether you're doing trading, whether you're soldering, whatever you might be doing. But yeah, it's incredible.
But Charlie, I'll be honest with you. In my mind, I've got so many permutations kicking off: market structure, price structure, higher highs, higher lows. I can just look at a naked chart and just think to myself. I can even visualize this as a macro range. I can see this is a swing high, this is a swing low. I can roughly guess the mid's going to be somewhere here. Oh yeah, this is interesting. Then I drop into the low time frame. So again, it's about mapping your market from the high time frame to low time frame. Start on the monthly, weekly, daily, 4 hour, 1 hour, 50-minute, 5-minute for execution, 1 minute for execution. And I execute on the 1 minute, the 3 minute, the 5-minute chart nowadays. And the reason why I've become like this is because, well, in late 2018, I sat down, I created a system for myself. On my system, what is price doing from a market structure perspective? What is price doing from a trend line perspective? Is price in a channel? Is it in a range? Is it a high time frame resistance? Is it a supply zone? Is it a macro range? Is it a high time frame macro range quarter? So now all this has become implicit second nature for me there. I've got 8 checklists in my mind that I can just go bang, 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 bang. Literally in 2 minutes, I know if I want to take the trade. And then I'll probably, if it's a high probability trade, I'll share it on Twitter. And I'm not blowing my own trumpet. I couldn't give a fuck what people think, but I do put my balls on the line. I do have a good win rate when I talk about the high probability trades that I want to take. But it's like this. Look, at the end of the day, price is like reading a story. If you can understand the intricacies of price action, what price is telling you, inefficiencies, you can sometimes look at this without, I believe, a market profile. Maybe not this chart, but other charts. And you can probably guess that there's some single prints here. If you can bring up a volume profile, there's a fairly good chance that, you know what, there's probably some single prints here. Well, when price was, let's say, over here. Oh, this replay tool really pisses me off sometimes.
If Sailor used
There we go.
10% of your execution, it'd be up 2x on Bitcoin.
Yeah, so look at this. So when I see something like this, right, and people are starting to short it, oh, because look, there's a wick here, and we've taken liquidity, and this is no, not really, not for me. When I look at this, I'm thinking straight away, forget this SR level. Just look at this from a bare bones price action chart. Look, this is maybe a bad example. Just ignore the time frame here, but when you look at this here, I'm seeing this here that we never really quite filled this inefficiency up here. Go on, go fill that inefficiency. Get back under this level here. And I could fancy taking a trade. So again, this is where I'm looking left, looking for some inefficiencies, single print, possible single prints. But I don't need to see that on a market profile chart because I'm not trading a 5-minute chart. I'm looking for positional trades on an intraday basis off high time frame levels. Run it forward. Isn't most of this now filled in when we get the push up? There you go. Boom. Get back inside. Wait for it to get back inside. I'm in business. That's what I'm thinking. And now it's time to play. Look for the underside retest, maybe a push up, then back inside. There's your trigger. Take it down to that 165. Because that 165 is also, like I said, there's your range high, there's your range lowish. This is the zone where I'm looking to trade price. Chalk off a 4R, chalk off a 2R, whatever it is. So that's, like I said, just a thought process that you sometimes see these inefficiencies where price halted, sold off, didn't quite, there's that supply zone. If you just look left, there's that supply zone there. It never quite got tagged. It just left a slight gap. Eventually took it. Whatever there was, breakout traders, high liquidity area, rest is history. So that's the execution. Now, as a trader, you've got to be thinking to yourself, well, all right, you've nailed the entry. You've now got to manage your position. And it's still not comfortable. You know, I still have to be careful. But I've done the hard part, and the hard part is execution. And that's it, really.
And now you're in. That's it.
That's what she said.
No, it's beautiful, man. It's great to see it, and it's great to see kind of different sides of it. Because I mean, one thing that I'm not brilliant at is taking shorts on altcoins like this. I'm better at, you know, shorting parabolic altcoins, and you know, basically shorting blow off tops is probably the best way to put it.
Where you're very good at, and again, this is the great thing. It's like boxing. Boxers, you know, styles make fights, right? And the same with traders. Trading styles make markets. And if you look at the way you played TRB 2 weeks ago, you nailed the moves to the upside. They were not trades that I would take, but yet they were trades that you take according to your system that makes you profitable. Whereas somebody like me, I was looking to hit the market upon the distribution top or below off the top, where I feel comfortable. So again, different styles, different traders. It's just knowing what you're good at. And like I said, what I do may not work for other people. And likewise with you, Charlie, your system is not something that I can probably slot into straight away. It would take me a lot of time, but I have to go with what I know is a winning strategy for me, and 100%. A strategy that works for me. And that's it. That's it. Essentially, that's what it comes down to.
I think the system is a way that you, as an individual, make sense of the market. And, you know, obviously it has to be profitable, but it's taking into account the way that you see it. And, you know, for me, it's all about momentum. And it's about relative strength, and it's about betting on the fastest horse and trying to get, you know, for me, it's plus EV to get on board the fastest, strongest horse out there. And that's why I'm always trying to kind of chase beta and chase that strength, which a lot of people struggle with, I guess. Struggle to jump on board, like, quote unquote, late. And they look at charts and go, oh, well, I'm late to that. It's moved already. And it's like, often that's the start of a movement. It hasn't been the last week, right?
Absolutely, mate.
The last week's been difficult, but
it has been choppy, and I think it's a very slow market out there. But again, I'm very bearish on altcoins, and I actually, you know what, I advocate against shorting altcoins for the majority of folks who watch my streams, simply because it's a ruthless environment. It only takes one big fuck you candle to the upside on thin books to wipe you out, and that's why you've really got to be selective which altcoins you're going to trade. Like Arbitrum, I would not tell anybody in a million years to go ahead and short this one. It's so much easier to think about long in the market in the next, not even long, and just buying spot down here. If you're a shit trader, just own it. There's no embarrassment. 90% of people lose in this market most of the time anyway. That's why there's that rule 90 90 90. 90% of traders lose 90% of the capital in the first 90 days of trading, and then they throw more money into the market and lose that as well. So there's no shame in just respecting the market. It will humble you very quickly, and we've all been humbled by the market. So, you know, moving forward, like I said, sometimes it's easy just to be patient and wait for those opportunities that can give you asymmetric returns whilst you're trying to hone your craft in trading and figuring out what type of trader you are. But like I said, for me, the turning point, Charlie, was when I saw WMD Forex nail. He took like something like 70 trades in 10 months.
73 trades, 10 months.
And something like 2,000% return on equity.
Yeah.
Like when you think about that, 70 trades in 10 months, you do the maths. It's probably taking two trades a week, 8 trades in a month. 8 months later, he's taking 80 trades. So he did over 10 months, I believe, or 10 months, yeah, 70 trades. So
yeah, it's like 2 a week max.
Yeah, two a week, one and a half trades a week, maybe some weeks no trades, and the other week 3 trades. So that's how I've really slowed my trading down over the last, I'd say 2.5 years, is high probability setups. And when you have high probability setups, you're looking for a high win rate, essentially, and you're looking to play the probabilities in your favor. So the downside to that is you have to adapt, because when you look at RNDR as an example, I've had to wait a few weeks before I've touched this. I was last trading this over here on the way down to 172. I haven't touched any of this since July. This is the first time I've traded this again 4 months later. So you have to keep looking for opportunities across market pairs and other areas like FX indices. And when you give yourself an array of choices, you're not forcing yourself to trade. You're waiting for the best opportunities according to your system. With that, you have to adapt, right? Because I'll give you a classic example. Who was shorting Matic all the way from 2021 all the way down? Me, right? And then you look at Matic over the last 2-3 months. SC's been talking about Matic way more than I have. But for me, me and SC shorted this all the way back down. This is not something that I'm interested in as a swing trader, because there's nothing there. It's August, September, October. This is where, as a trader, you can't look at this and think, yeah, as a swing trader, I'm going to open up a swing trade off this SR level and look to hold it down to 30 cents. It may not happen. You really have to say, all right, if this is a high time frame level, there's a daily chart. Okay, there's a daily SR level. There's your lows. Well, guess what? You've now defined a daily range. You now need to drop onto the 4-hour chart, the 1-hour chart, and restructure how you're looking to trade this market. Within here, ignore the time frame that you're on for the time being. Just look at price as being fractal. You know, if you could have caught some form of, I don't know, rejection, there's your spike up, underside rejection. You take an entry, you're looking for these lows here. You are now trading a range within a range. We mapped out a daily range. Here we've got a local range. We know that the volatility is heavily subdued on the daily time frame. You cannot get swing trades off on the daily time frame. You've got to go to the 1-hour, the 4-hour to reassess where you can do your business. That from here to there is likely to play out over what, 7th of October, 9th of October, 3 days. You could have probably chalked off a 3-hour trade there. So again, this is what I mean. You have to be adaptable to the market as to what the market presents you with, because your system has to adapt to the conditions of the market. You know, you can chalk off a 3-hour trade, stop at the high, back inside. You're looking to trade. You know you're wrong if price starts pushing back above, cut it, because all you're waiting for, you don't know if price is going to go higher or get back inside. Guess what? You can take that same trade again, small scratch, but you're playing the probability of going back down to the range lows, and then happy days if you make more on top of that. Great. So that's why I keep talking about adaptability. Is right at the start. You've got to adapt to the current market conditions as to what's out there.
Yeah, I love it. I mean, I love like your simple explanation of range trading, effectively, you know, and actually, like that's something that people can just take. Do you know what I mean? Just take range trading and just treat everything as a range, and try and treat it as a range until it does break out of said range. And then that's where your decision point is. And, are we in a trending market? Are we likely to adapt change over to a massive bull market anytime soon? I mean, I don't think so personally, but
Yeah, I guess so. And I guess it's styles. You just got to find a style that works for you. And there's Harry keeps asking thoughts on Elliott wave theory. Harry, my question to you is, what's your thoughts on price action? What's your thoughts on head and shoulders? What's your thoughts on market profile, order flow? What's your thoughts on using RSI? You don't know until you can systemize it. Elliott waves in its generalist form isn't some magical tool set that's going to make you profitable. It's how you apply Elliott waves. You can do the textbook way, but it may not work for you. You may have to fine tune it into a way that works for you. That's where something like Elliott wave theory could add confidence to you as a trader. But I think if you just take it in its purest form, as with anything, it's not really going to do a great deal for you, because if it did, everybody would be an Elliott wave trader.
Yeah, I mean, I think, I see you occasionally, or you used to certainly talk about like Wyckoffean schematics and stuff, where, you've got essentially distribution or distributive or accumulative patterns. And I mean, I rarely see you just tweet that blindly and take a trade off that blindly. But if that's a point of confluence that you can add to your system and to your thought process and say, well, actually, in the scheme of there you go.
So I've got a question for the chart, and my question to the chart is: this is an accumulation schematic, but what is it really when you look at it? What is this? Any takers in the chart? When you look at this, what is this here? What are you looking at from a structural perspective? It's just a range. Ignore all this shit, phase A, B, C, D, and E. This is good for if you're trading on the macro time frames, like we're doing for Bitcoin. Ignore the fact that it's just Wyckoff. There's your range high. There's your range low. What's this? Range low formed, range high formed. This is your range being formed here in phase A. Now you've got a deviation or a swing fail. Now you've got to revisit to the range highs. Now you've taken out the range lows. The minute you get back inside, there's your long. Your long trigger's there because you've taken out this swing. You've reclaimed under, back over, deviation, QM, whatever you want to call it. There's your trigger. On an order flow, or maybe on a footprint chart, you're probably going to see aggressive sellers piling into passive longs. Those sellers are going to puke. Price goes up. So the concepts, whichever way you look at it, are all the same shit under the hood. It's just how you wish to trade it. And then when you take it forward, really, a Wyckoff accumulation schematic is, well, in a nutshell, all it is you're either going to get a double bottom, right? There's your swing low, or a triple bottom. 1, 2, 3. Now, if you know anything about reversal patterns, your classic reversal patterns are either a 1, 2, 3 triple bottom pattern, 1, 2, 3, or you're going to have a double bottom pattern. Same on distribution, double top or a triple top. And all that fits in the premise of accumulation and distribution schematics, which are essentially a range-bound environment. And what happens in a range-bound environment? Eventually, the range becomes a trend, and that's where you latch into a trending market. So that's kind of the high-level overview of why in my trading manual back in 2018, 2019, one of the first things that I did is, what is my strategy? Well, strategy number one is I like to trade accumulation and distribution patterns or schematics. What does that mean? It just basically means I enjoy trading ranges, whether it's accumulation or distribution. Where the differentiating factor is, this is where context comes in. You look at Solana. As a trader, this is a form of macro accumulation. As an investor, I do not want to really be buying this. I talked about double bottom patterns. Well, guess what? If I can get a double bottom somewhere down here, maybe a swing fail of this, maybe shit really hits the fan, gets back inside, there's the long. There's the so-called generational long for Solana to potentially go back to $50, $100. But as a trader, if you look at this from a trading perspective, not great volatility there, right? For somebody who, as myself, was shorting $200 all the way to 50, 140, down to 50 again. When you look at this from a trading perspective, and I'm just going to wrap up on this one, Charlie, is, well, guess what? We've just used a high time frame macro range. But this here when you look at this, is an SR level that I shorted based upon what? Based upon this range. And this is a setup that I talked about on the stream, not Sunday. I think it was Sunday before that. Yeah, it was actually the Sunday, or I can't remember, last week. But again, look, gets back inside. This is it. This is the range I want to trade. That's it. Chalked off a 3R trade.
Clean. Very clean.
So there's opportunities in the charts, and that's why I was saying, having a rant on my own stream, that look, all this bullshit about touch grass, markets are dead. No, not really. Markets are not dead. There's plenty of opportunities. Maybe the problem is that you can't be asked to look for them, or you don't have the skill set to find them. So,
Yeah, I think that's the thing. And, you can go back and you can replay this. You can replay this stream. You can replay the charts. You can go back and back test your strategy or your thought process and go, well, actually, why does it work or why doesn't it work? Take a range strategy, even with the benefit of hindsight. Like you might know that last month or the month before, whenever it was, TRB was on a tear. Okay, well, are you going to short the initial range break? Probably your brain's going to tell you not to, but you can go back and backtest and systemize it with a basic set of, logic and criteria.
Yeah, this is right for shorting, as far as I'm concerned. I kind of regret quitting my short at 47s the other day, and it's at 46s again. I've had 2 trades on this, 56 and 53 compounded. This looks ready to die, if I'm honest. And sometimes, look, I can just look at this and think, yeah, this is fucked. Like, literally, straight away, I know this is fucked. Now I've got to find a way to get on board. I know there's a level of SR here. Okay, straight away, there's a level of SR.
Yeah, it's a real clean high time frame kind of pivot.
And then you got this pivot here. I've got now 2 ways to get on board. I'm looking at this. Look at this chart. There's support. There's resistance. I know that there's 2 ways I can get on board. If for whatever reason, there's my range. Okay, so this is the daily chart. Let's just put this up here. There's a level of where price can't seem to close above. And we're using this as an SR level. Okay, cool. Straight away, I'm going to go to the 1 hour chart. Straight away here, just tidy up the range. Range high, swing high. Maybe I can use this as a range lows here. There's my range. Where's my mid? Something that I can pivot off around a supply and demand zone. Maybe this area there. Okay. Not the cleanest, is difficult, but the fact that I can see that sellers stepped into the market on the spike up. Okay. And again, this was the squeeze up that we saw on the weekend. Rally, drop off, another little run of late shorts piling in. And eventually what I'm thinking now is, all right, I want to get on board. Give me another squeeze up. Back inside. I don't know, it could go all the way higher and then back inside. That's the trigger. And I think at that point, it really does shit the bed much lower down. To add confluence to that, well, if anybody remembers, I wouldn't call it alpha. Some people may consider it alpha, but use the BTC chart as confluence. And when people were trying to fade TRB a few weeks ago, I kept saying, go look at the TRB chart on the BTC pair. And I did that when price was around about here. Just around about there. Okay. And this is where you were long in it, Charlie. Correct me if I'm wrong. You did really well on the long here.
It's pretty much long in it the whole way.
Yeah. This is it. Right there. Look at that. On the daily chart, all I said, take out these highs here, get back inside. That's the trigger for me to start shorting TRB. Go on the 4 hour time frame. The minute you're back under, you want to start shorting the shit out of this. Your invalidation on the BTC pair is this here. You really don't want to see acceptance. So any spikes, any little bumps back up into here, or you can even start scaling in, because if you zoom out the charts from a macro contextual perspective, you're looking to trade price just as it has done every single time. And we are in a bear market. Fast move up, fast move down, fast move up, fast move down. Again, all this downside, I think we come back potentially down to here. So when you align this with the USDT chart, let me just quickly run it forward. There's your tag. It tagged it. So I know that because I traded it. Yeah. So there you go. You can now contextually look to work this on the way down if you can fire a good enough trigger point, which might be maybe another spike up here and it drops lower down. But you got to translate that onto the TRB USDT chart. So using both charts in confluence in parallel, any pushes up, rejection, there's your cue to get on board. And Charlie, what's our favorite structure when we trade? When
Oh,
you look at this, does this not look like a complacency bounce to you
it
potentially?
does. It looks like a beautiful parabolic curve into a lower high, and that is where you short on that start of that decline on that lower high. It's where you
Oh,
pile in, and you've got two invalidations basically. That
can
lower
we
high and the high high at the end of the parabola.
can we tempt you? Are you tempted to put this on your radar for the way down?
Oh, whenever I short an altcoin, I get a plus 10% candle in the opposite direction, and I
Oh,
learn what
fuck's sake.
slippage is.
Yeah.
No,
Thing with TRB, it's a bit of a fucker because it's a low supply coin, so it does move
it
around very
is.
fast.
The,
It
the, the downside of it as well is that, like, I'm mentally checked out of it a little bit because I've kind of made my annual P&L on it, so
really,
I, I'm quite happy with it at this point. And to kind of give it back, but yeah, I've drawn similar, kind of diagonal trend lines on it where I'm looking at, well, clearly on a rotational basis, it's losing its strength. Clearly, from a market structure perspective, you just see consistent lower highs, and actually, on your 4 hour chart there, it's quite evident.
yeah.
But
How would I do this? Probably some. If we don't get a move up, take out these lows here, push up into this underside. Um, there's your trigger. Stop. I'm not too sure. It's a fucker because it moves really fast. And maybe on the safe side, stop just above here. Trigger there.
yeah,
As a swing trade, probably 25s. You could probably get entry, stop, 2.5, 3 hour trade. I mean, if you want to be really tight and just say, right, it shouldn't really get back above this key pivotal level here, then trigger, stop, and you can squeeze it, put more size on, and still take that, I don't know, £100, 1K, 10K loss, as opposed to having a wider stop and going for a 10K loss up here. So,
yeah.
yeah.
Or equally, a push up to that kind of 52, 53 level, and over
That's
under
the
that,
sweet spot.
you know,
Yeah.
and then
That's
and
the
then
sweet spot.
compound on the loss of the diagonal. I mean,
Yeah.
I love pure parabolic run with a blow off top, and then that second lower high. That is like, I can go full size on that. I can completely go against the grain, even if I've longed it all the way up. But as far as I'm concerned, that's kind of happened, and that happened up at that $60 mark, and it wasn't
Yeah.
as clean as, say, between the 5th of September and the 18th. Like, that run there, just beautiful in terms of like the parabola. Like, that to me is lovely.
And I
Even
think
though
this is
it wasn't the top, obviously, but
Yeah, and I think this is one of those coins where, for obvious reasons, well documented, you probably have to pay attention to the funding rate because of the obviously shenanigans happening with pushing spot price and futures lagging and futures
yeah,
paying a fuck ton in shorting funding rate. So this is those instances where it makes sense to look at funding. But yeah,
yeah, 100%. I mean, it's fine now. It's 0.004. Yeah, 0.005. But yeah, when it's minus 3%, you've kind of got to be really careful that you're going to take a 3% payment essentially every funding cycle. It's pretty fucking brutal to be basically offside anyway on a strong trending coin to the upside. At least it was for the last month and a half or whatever. So yeah.
yeah,
Well, I mean, that has been absolutely incredible, mate. You have absolutely dropped so much sauce, whether it was talking through RNDR, whether it was just talking through trade thesis, talking through execution on things like TRP, using things like alt BTC pairs as confluence, and just generally how you construct an entire trade thesis using a combination of technical market factors. Yeah, amazing stream, as Kaz says. Thank you so much, mate.
yeah. No, thank you, mate. It's a pleasure being on. And like I said, I always try to keep it basic. So I don't delve too much into market profile, order flow. Magus, is one of the best at teaching it out there. Very, very deeply knowledgeable, and I'm sure you can appreciate that as you work closely with
100%.
Magus. And sometimes I just let people who are more well versed in certain subjects who use it on a regular basis. Well, it makes more sense for them to educate the masses out there, as opposed to me trying to claim that I use order flow every single day, which I don't. I use it sparingly as and when, but each to their own, right?
Yeah, 100%. And it's another, to your point earlier, of niches around things like, Elliott Wave or MACD or whatever you go into. Like, I watch Magus crush it on a daily basis with order flow, and I'm like, wow, that makes it look really easy. And
Yeah,
he makes it look easy because he's traded like that for years.
that's right.
You make this look really easy because you've traded like that for years, and it is really easy in your brain. Do you know what I mean? Like, that's what you've developed. That's the skill that you've put your time and effort into. But yeah, it's been absolutely incredible having you on, mate. And
Well, thank you,
conscious that it's
Charlie.
9:30 and you probably want to oh, a
It's
bit more Wyckoff.
yeah, but there you go. That's your classic. This is what I mean about trading. I should really let you go, but trading distribution patterns, looking
No, mate,
for this.
I'm good for time.
Yeah, so you've got your base. There's your base. There's your aggressive trend up. This is your distribution pattern. And when I talked about having a strategy, this is what I'm talking about. I love distribution tops because I know that when this resolves, right, it could come back up like it
Mm,
does here. And that's a scenario that Charlie talked about, that running that 52, 53 level. Guess what? If that happens, I'm absolutely taking that trade. Then at that point, it's game over. That's where you get the range. If you can short this
mm,
and hold on to it and hedge at the low with a long, but you're looking to trade the short all the way down, take your long hedge off when it bounces and gets back under, just cut it. Your shorts are going to pay you handsomely. Sometimes these one or two big trades a month or over a 6 to 8 week period are the ones that pay you out big time.
yeah,
So they come around
100%.
they come around every so often, and you've just got to know when to put your foot down.
I think that's it, isn't it? Like, I always got told that when you start trading, you should always take, I don't know, 0.5%, 1%, 2% risk, whatever it is on every single trade. And then as you evolve as a trader, you know that there's the odd trade that is such sort of high probability and you've got such a great invalidation on it and it fits in with whatever the current narrative might be or, whatever, but you can put your foot down on it. You can size up. It doesn't mean you execute like an idiot and just go 20x leverage and go all in. It just
Yeah,
means that actually, instead of 0.5%, you're willing to take maybe 1, 2, and maybe there's opportunities for you to either add or you just full size on straight away, which, if you do it the opposite way and you scale in, there might be a scenario where you don't. And having that in your playbook predefined, I think is one of those things that really helps you out when it comes to that point. If you go, well, I've got a high probability trade that could net me, some real decent R. I'm pretty damn confident in it because it's got these 7 factors leaning into it. What's my rule? Am I
yeah,
allowed to put 10k in it? Am I allowed to risk 100k? Am I allowed to risk, I don't know, whatever? What am I allowed to risk? And I always find that personally, taking those decisions out of my own brain and systemizing it to the point where I've got one of the best setups I think I'm going to get in a long time. I'm allowed to risk X dollars, and that
yeah,
looks like Y. It just makes it so simple.
exactly. Sometimes you just got to go. You know from experience when it's time to go for the jugular, and
Yeah.
it comes around every so often. But you'll know when you see it, and that's really all there is to it. And for me, it's always high time frame levels. When I see price trade high time frame levels like this, balls deep. This up here was one of my largest position sizes of the year. This was a big trade for me. From 330, 320, I think it was 321 down to 180s in a matter of 2 weeks.
Yeah.
Big trade. So it's just knowing when to really floor it. And unfortunately, in this environment, you see the lack of volatility, you've got to drop down to the low time frames and probably not use as much size because you can get offside very quickly on any given day. So if you haven't got good risk management, you're asking for trouble.
Yeah, 100%. Well, for me, it's a combination of good risk management and good execution because if you are starting to play, I don't not necessarily breakout trades, it's probably a bad example, but there will be a lot of times like I trade a bit differently to you in that I'm sometimes trying to protect my average entry quite a lot. So if I take more time-based trades, I guess, and if I'm sat in the position and it's kind of steadily floating up and then starts coming back towards my entry, I'm less happy to take that risk because I'm typically playing low time frame alt rotations.
Makes
So
sense.
You know,
Yeah.
when I'm cutting off, I'm cutting, and I can be wrong 3 times in a day and lose no money. And everyone's
Yeah.
like, "What? What do you mean?" And it's because I might get, you know, slightly behind on fees and stuff, but generally I'll execute around my
Takes
technique.
time. Takes time.
When do I go balls deep? XRP was one for me actually. When we got that
Really.
news, and I was sat at the desk, and I literally saw, you know, we were up 30%. And I was like, nah, this is not going to go up 30%. This is going to go up more than that. Bang. You know, fully retraced now, and it was only an
Oh
intraday
shit.
rotation.
Yeah.
But I missed the minute that it came out. But longing, you know, the first little consolidation on the way up, absolutely fine. And playing it with size because the liquidity was there and the momentum.
Yeah. Yeah. Absolutely. No, it's I love it. I love markets. I sometimes feel really blessed that I wake up and this is what I get to do some days. You know, most days I no longer work a typical 9 to 5, unfortunately. It has an impact on your own aspects of life. I think you can appreciate that as well, Charlie, with responsibilities and not really having a structure sometimes. And
Yeah.
but it's also a beautiful place to be once where you're financially comfortable in the sense where you can afford not to take trades sometimes and know when the right time is to trade as opposed to forcing trades for a living. And my final note to anybody would be if you want to become a trader, you need a lump sum of capital as your cash reserve. If you're trading and working and you're risking silly amounts of money in the market, you're going to blow it up. It's one of those jobs, especially when you're starting out, you've got to be fully focused and you've got to give yourself time to learn how to trade. That could mean essentially, whilst you're working, just study, sign up to a paid group, sign up for some courses, whatever it is, just study, paper trade, look at what people are doing, look at how your course tutor or your educator is trading, understand what they're doing and why. Then start taking some maybe $1,000 account if you can afford it, or $500, and just take really small size trades just to get into the habit of, all right, I'm getting a feel for execution. All right, I got this wrong. Why did I get it wrong? Was it because I'm working and I got distracted or I couldn't see the screen? So you're only going to really start seeing benefit is when you actually have a lump sum of cash saved up that you know that God forbid anything happens to you, that's your get out of jail card. Secondly, you're not in the market to make money straight away. You're in the market to learn and understand how you can make a living out of the market. And eventually you hope to turn that into trading for a living where you've got enough cash in the bank to support you for 2, 3 years to give yourself a good chance of having a crack at this. But it does come at a cost. If you're young in your 20s, great. If you're a family man and you've got kids and a wife or two, then
A
it's really
wife or two.
a wife or two, yeah. Uh, then it's a real tough balance because you've got to you're going to get distracted. You've got distractions all day long. You've got your own responsibilities. You're not going to get a chance to sit at the desk 14, 16 hours a day. You've got to find a system that works for you. Me, I'm not in my 20s. I'm above 35, under 40. Let's put it that way. So for me, it's a case where I've got responsibilities, and I try to adapt a style that is consistent, makes me money, makes me good money in a month, and I'm not forced to take trades. So again, I talk about adaptability. It's understanding who you are as a trader and what you can trade and the times you can trade.
100%. It is a 24/7 market, easy to get addicted, and easy to be here all the time if you want it to be. But got to kind of be realistic with it and what you can actually dedicate.
Absolutely. Charlie, it's a pleasure. I think we should
No,
do
it's
this.
been an absolute pleasure, my friend. Thank you
Maybe
so much.
maybe we should get you and me and Magus to come on the stream. That'd be
Oh,
good.
a tripartite. Yeah, we can just spend the whole hour saying all of those crap, and he
Yeah.
can teach us why it's not.
Why not? Hey, why not?
That sounds amazing, mate. But thank you so much for coming on. Thank you everybody for being here. I hope you've all learned a lot from EXO. You know, it is incredible watching his thought process and watching him conjure trade thesis out of nowhere. Thank you all for being here, and follow the stream and all that. YouTube, like, subscribe, and I'll do some mouth wide open next 100x altcoins, like Superman. And yeah, obviously follow XO if you're not already, but I'm sure you all are. I'll drop his Twitter in the chat, as if anyone following me isn't following him.
Hit the subscribe and the like. Let's get to 200 likes at least. Come on, man. It's at 88. 12
88,
more.
is it?
12 more.
Is it uncouth to like your own stream, or
get it to 100 and Charlie will give you one day's worth of one-to-one mentoring. Cough.
Yeah, let's go. Right, I'm shutting the stream before it gets to 100.
Look at that. 94, 95.
Let's go.
Charlie, come on. So, would you be willing to do a one-to-one mentoring for one of your guests? Maybe. I think you should.
Yeah.
You know.
Yeah, go on.
A couple of hours. Get a little competition going for your views on the next stream. Get a Google form signed up, filled in. Let people enter and pick a lucky winner out.
Yeah, that sounds good. What we'll do is we'll do a month. We'll do a month of Paragon, and you'll get access to all the videos, all the all the indicators, everything in there, and you can actually learn a little bit in your own time, and you've then got unfettered access to both mine and Magus's brains, and you can ask us a ton of questions as you're going through your learning journeys, because that is. It's at 99. I can like my own thing. There you go. There's 100. I've uncouthly liked it. But yeah, we'll do that. That sounds better.
Yeah. Sounds good. Get them in, mate. Get a little competition going for these lot. It's giving a little taste of trading educational material. Why not?
Yeah. Let's do it.
So
I will chuck a Google form up, and I'll do it on the next stream. So if you like and do all that stuff, I'll chuck it in the chat. Because I need to whip up a Google form.
Yeah, I'm actually doing a $2,000 giveaway on Friday. In partnership with the exchange partner that I'm with. So yeah, Harry was asking XO, when is your $1,000 giveaway? Sorry, Harry, I've had to get the finer details.
Sounds like you doubled it as well.
Yeah, so I'm putting basically the exchange, obviously for various reasons. I can't mention the exchange name on today's stream, but. Yeah, the exchange are going to fund somebody's account with $1,000 in the trading account. So that means that you can't just pull the money out, but I'm going to go one further and actually give away $1,000. So that basically means that you've got $1,000 margin and $1,000 trading account, which is your money, which you can pull out. If you want to pull out the money that I give away, that's fine. I'd rather you trade with it and see how far you can take it. But I will be announcing the details of that on the Friday stream. So tune into that one if you guys want to enter a competition, and it's open to all. And I think I'm going to be doing that on a monthly basis moving forward for October, November, December. So it's not going to be just a one-off. Probably three instances of that. Cool.
Nice. Right, I've got a Google form actually. Absolute boomer. Let's see if this works. Yeah, this works. But we can do it this stream so that I'm not scamming people to, just join the next one. I'll drop it in the chat.
You're going to put it in the description.
There you go. It's in the YouTube chat. We'll do it now so that I'm not ripping you off. What I'll do is I'll drop a little. I'll leave it up on here for a couple of days because I'm literally in London tomorrow and Friday, and I will draw a winner on Saturday or Sunday. And we will announce a month Paragon membership.
Fantastic. Good stuff.
There we go. Thanks for putting me on the spot, XO.
You're welcome.
And thanks to everyone in the chat for being here. Just fill that in and click the accept, and I will steal all your bored apes. I'm only joking. It's a Google Forms. You can see that.
Fred Frank, if you're not in, make sure you get 10 Gmail accounts and just fill in 10. I'm joking. I'm taking the piss.
Oh no, I'm gonna
spam the Google Docs. I bet people are gonna go out there and create 10 Gmail accounts and put 10 entries in. Yeah.
It's funny. I had 200 viewers. I've got 1,000 responses. How does that work?
Yeah, I think the best way to do it is just like times on it. People who probably first 200 entrants, I think they get a chance. So. Yeah, Trader Frank, if you're watching that, spin up 200 bot accounts and just spot it, mate.
Right, before XO gives away more secrets of how to scam.
All right. Sounds good.
Right. Good. Cheers for being on, mate, and cheers for everyone being here. I'm gonna dial out the stream and see you all next week, legends.
All right.